Oh, aloha everyone. Joshua Hayes at BigWaveTrading.com. Wanted to make a public video for the YouTube community following Tuesday's session because everything has basically changed after today. I was already short-term. I've made these videos previously, and subscribers, members of Big Wave Trading know that I've been warning that things are not lined up. And we'll go over the index charts here in a minute, but before we do, we're going to look at the good and the bad from Tuesday and any lessons that we can learn from them before we go to the market where things now are really not lined up. And if you are looking to go long this market, I recommend everybody pump the brakes, wait for better conditions, wait for better news flow, wait for better technical conditions, and I'll show you what I'm talking about here in a minute. But first off, there were actually some good, surprisingly, on my end following Tuesday's session. SPWH. Now, SPWH, I'm already out of 50% because following this move right here with this candle with the huge volume bar, I moved 50% of I made 50% sell limit at 524. This session right here, thank goodness, it hit 525 and knocked me out of 50% of the position. So I got some nice gains. Now I want to show you why I got long SPWH. I got a bullish hammer candle over candle right off the 50-day moving average and recent support level on heavier above average volume, and you can see the increase in green bop. It immediately started to work. We had that big day right there, put a limit right at the high of the day, a sell limit to take profits in case it gets back up there. Comes very close on this session, but misses it, but finally comes back up, hits it on this session. Now, where I stand right now on this position, I have a 27% gain and slightly under 1 month. Heck, that's not too bad in this market. However, before today's session came in, I still had trailing stops all the way back down to here since there's an overall uptrend line and the stock is working here. Well, that uptrend line is now more true than ever. If you are long with SPWH with me, this is now your final stop following today's session in the market. And this, for most new traders, should be their final stop. So if SPWH trades below this uptrend line, that would be the final cut loss. But for me, I'll probably put some stops here, probably like a quarter, then a quarter, then a quarter, and then the final right there. And that'll ensure, with good to cancel sell stops, that will ensure that I leave SPWH, the entire position, with profits, no losses. So that, unfortunately, is the biggest winner in total from today's session. The other one I want to review happens to be a hedge I'm long, LABD. Now, the way I operate with hedges is I hold these when they trigger all the way to their base low. So that means with LABD, once I got long here, I put a stop here, a stop here, a stop here, and a stop here. 1, 2, 3, 4, 5. So even though right after I got long initially, LABD started to trade lower and knocked me out of 2 of the 3, 1, 2, 3, 4, 5 stops, knocked me out 2 of the 5 stops, I was still long LABD, and following today's session, we have a small gain. Now, it isn't much, but hey, at least I still have some hedges out there, thank goodness, in this market. Now, do you guys want to see the ugly from today for full transparency? Let's do it. I took a shot at AAOI following this session. Interested me. I already knew it was heavily shorted, but after this session, I felt I was going to go for it. Unfortunately, the next day, I wish this would stop happening now. So finally, this evening after Tuesday's session, I have 0 new long signals, and I only have hedge signals, inverse leverage ETFs galore for Wednesday's session. If they trade up and through my good to cancel buy stop limit levels, I'll be hedged in this market. If the market wants to just gap up and then run for the rest of the session tomorrow, then I won't have any of those hedges called on. But if they do trade up and through my good to cancel buy stop limit levels, then I'll have a position. Now, I tell most traders, if you take my long positions and you go in size, which I do not recommend in this market, you have an uptrend line, a close below the uptrend line, you're out. Well, guess what? If you would have obeyed that rule, you would have been out immediately. Now me, I put 50% of my stops here, the final 50% right there. So immediately on day 2 following getting filled, I was knocked out a half. Fast forward to today, ouchie, ouchie. This is another example of why I use stops. My final stop was here, 1067. Let me go look at my other computer. I can tell you exactly what I got out at, because that should have been today. 1065. I was taken out of AAOI at 1065. Had I not had stops, I'm now sitting in AAOI with a larger loss, as it's at 1023. Now, let's say you're still long AAOI somehow. Where's your final stop? 1 cent below today's low day, 1016. But there's an ugly trader right there for you to show that not everything works. The next one, AMTB. Ouchie! This one looks pretty bad, right? This was the first long signal. This is called a trend join signal. Got it immediately, but an immediate reversal. But once again, what do I teach all new traders? Draw your uptrend line. It's a little steep for me. A close below that uptrend line, you're out. Bam! Immediately, you're out. What would have been your loss there? Up 2%. Hey, remember how much we made in that SPWH trade? That's a good reward-risk ratio. As AMTB traded sideways still, though, I had a final stop here. Down there, 1907, 1918, didn't hit it, so I'm still long AMTB. AMTB started to look shaky a couple days ago, though. Do you notice that move right there? So what do? I immediately, so I had half my stops here after I got filled. I personally get knocked out of half. Still have half on. Moves higher, but following this session, what did I say in the last video lesson? Anytime there's a major reversal and heavier above average volume and I lose my technical catalyst, I'm raising stops immediately. So now what I have left, 50% is here. The final stop is right there. AMTB obviously ran it the next session, but I still have half. Now look at what happened here. Now we have red bop and a heavier volume. So with what I have left now, 50% goes 1 cent below this low day. I should have been intelligent. I'm willing to give these names room to work until I'm 100% sure the market doesn't want to go higher. Following Tuesday's session, I am now 100% sure the market doesn't want to go higher in the short term. Doesn't mean it can't. Doesn't mean it will. It doesn't look like it wants to go ahead and go to new highs before it pulls in. But AMTB, good thing I did that, right? I got 50% right there. Hey, good thing I didn't just get out of it, because now we're looking good again, right? Wrong. We're done. So AMTB, that's it. You can see here the low, 1887. The low here, 1907. So 1906 is my final stop. I'm now all out of AMTB. But once again, if you're constantly adjusting the uptrend lines, your final stop level would have been right here, no matter what. If you held it all the way to today's low, it's not necessary. You should always be protecting your profits. But let's say you did. What's the total harm? 7%. Let's raise it up to 8% with commissions. Not too bad. And then the last stock I want to review, just so you know how to handle these, Goosehead Insurance. Goosehead, I went long initially. This is actually incorrect. I went long Goosehead back here initially. I added to the position here. But why is there only a triangle here then, Josh? Because unfortunately, I was too tight with my stops and I got completely shaken out of here from that long position back here on this day here. Unfortunately, it was for profits, no harm, no foul. Unfortunately, I came back in for a second chance and I had a tough time going about it until today. Today, that's about it. And how do you know that's about it? Let's draw the uptrend line. We got to kind of cut through these because that makes a real true uptrend line. But what was your warning sign before today's failure? That move right there. It attempted a breakout and reversed on heavier above average volume and has lost its green bop. I immediately moved 50% of my stops to here. Following today's session on GSHD, I now will have 50% because I believe I still have a position. Let me go check my end of day portfolio. I'm pretty sure I still have a position. I sure do. So 50% now goes here, which is splitting hairs right here where my final sell stop is. But Goosehead is another failure, but I just want to show you what's the total harm following today's session? Only 3%. Heck, guys, I'll take that every time. Those are some excellent reward risk ratios, but I hope you can see and understand how we handle on an end-of-day basis, even in a tough market, these positions. With all that being said, I want to show everybody, in case you haven't seen my previous videos, why this hasn't been an ideal market and is even worse right now. All right, well, we're looking here. We're just going to go over the SPY. We're just going to keep it simple with the SPY because this looks the same way across the board. I have the SPY, whenever, especially this bottom indicator, this is the most important indicator that I track with price. Price and volume is all that matters. Price is the real most important thing. It's the only thing that affects the profit and loss, but I do like to see confirmation. When this is green and the moving average line is trending higher, good things happen. And I mean, this can be seen anywhere, but the daily is still not as effective as obviously longer term time frames in this regard. That being said, when this is red and my M trend squeeze indicator is also red, when it first goes red, bad things normally happen. When the TSV is already red and then the M trend goes red, not good. It's vice versa. But whenever the TSV is red and the M trend is green, it's choppy. When they confirm, not good. Well, now they're confirming. So not good. Back here when this happened, you can see what eventually happened a few days later, a gap down. More importantly, I like to be on the long side, the right side of the longer term lines. These are the weekly lines. Now, where the weekly is the same thing. When TSV is up in green, look at what the market does. Follow the price up here when we're green here on the weekly. Follow the price here when we're green on the weekly. Here, green on the weekly. Here, green on the weekly. And this goes back almost everywhere. Even more important, the monthly. When the monthly is green, especially with TSV, this is your ideal time to go heavy into new long positions. This is your ideal time. This is your ideal time. This is your ideal time overall. This is your ideal time. Monthly time segment volume has been negative in red since last September. It's been over a year since my TSV indicator on a monthly time frame has been green. That's always said a lot. It's been very rocky, very choppy, very difficult trading environment. Until this monthly goes green, there is no reason whatsoever to be super bullish or super aggressive with margin, with size, with conviction on the long side until this flips green. Once and if it does, then when we have the setups, then when we see stocks like SPWH, instead of me just throwing 1 or 2% of my account capital into a stock like that, I go 5, 10, 15, 20%, depending on the quality of the signal, depending if it lines up everywhere with all my other technical indicators. But in a market like this, I take it easy. But you can see the trend of M trend has been going down ever since 2018 in January. If this goes red, I want to show you what the market does when it's red and red. This is 2000 to 2002. When M trend and TSV is red, it's not good. This is late 2007 to 2008. When they're both red, not good. Right now, this is just a normal pullback. But if this goes red and that's red, oh boy. But for now, there is no reason to be super bulled up here. This red is on the daily, weekly, monthly time frame on every single indice. Until my time segment volume goes green on one of these time frames, there is no reason to have any conviction or trust in this market whatsoever. And from moving forward here now, starting today, which I already was starting last week, but missed my opportunity today due to me living on the island of Maui and not having my sleep schedule proper. We'll fix that here in due time. But it's all about SPY, intraday SPY puts. I'm looking to trade SPY puts on bounces into resistance levels Right now, 295 seems like a solid resistance level. Think we may have come too far too fast, but you can see my 9 EMA and 3 EMA, even on a daily, they've both rolled over. They're both trending down hard. Moving forward, my focus now is on hedges and playing SPY put options intraday. The long signals, the gains, the winners from the end of day positions, we're going to have to see seasonality turn positive probably first, and even then I'm going to need to see this go green before I can even remotely start to get bullish on this tape again, especially after that miss today in the ISM number. Not good. All right, everybody, I'll go ahead and wrap it up here. I look forward to seeing you as a member of Big Wave Trading. If not, I will return with another YouTube video, hopefully sooner rather than later. Aloha.